So for this SMH, um, this is what we could, for now, is this is a plan. I don't really think that that SMH is going to end the year either flat for the next 3 weeks, because it's barely up year to date now. They will just hold off here, and I hope it's trying to make that push toward this 262, you know. So you got two rejections here. My third time it might clears it. You never know. So if that's the case, and this is what we can make out of it for next year to target 262, 283 is the all-time high, and then from here we just look for this 100% measured move from this low. Then we have 127 extension sitting here, then 161, 161 here for the third wave. So I got a long way to go. But you gotta have to look at things on a daily time frame. On the daily time frame is looks right, and this is the way you want it to go. This is when you're gonna bring the price back down to a 1 hour chart is where you're gonna find your swing trades. Okay, but you can't work opposite, meaning that you're gonna work on a 1 hour time frame and then your daily time frame is going in a whole different direction. It doesn't work that way. Um, August lows didn't. I mean, again, we just looked at them like this every single day, these 2 point moves that we just had here, from the last 5 days for this week, since from Monday. I mean, this is an hour, 1 hour chart, so 1 hour chart for 6.5 hour session. So you're talking about six bars. I mean, it looks good. 1, 2, 1, 2, 1, 2. Here's your 3 and 4 and 5. That's what we need because we need to complete five smaller waves, okay, within this three. And then from here, here's the fourth wave is gonna come into a play that will pair with this second wave. Okay. So how this thing will go, we don't know that. It could be a ABC, it could be a WXY, it could be a triangle. God, who knows? Okay, this is where the fourth wave will come into a play when this thing will run its course. But for now, this third wave that I have here is this is the election gap. Here we made the push here. Retest this support right there. This is where we had our correction, right? That was 3.9%. So from here, we made a higher high. Here's your higher low. Pretty much came right back toward this high right there. And then from here, we start making another higher high, right? Because we took out this high, which was 6,016. So now this becomes a support because this is where you had another correction. That's what I label a support here, and this is going to be a major support right there. Okay, this is because you had a largest percentage decline here. So from now, we're going to have to see how far will we go. If you take this low right there to this high, projected from this low, your minimum upside 100% relationship is 6184. Okay? 6184. Remember, a third wave cannot be the shortest wave. It has to get to at least 6184 and quite a little bit higher. But this is short compared to this. So we have, where are we sitting at 6,090 right now? From 6,090 to 6184, that's another 1.5% move. We need to get here at minimum. The price started to fall back down here. I mean, then we'll have a problem with this wave count. I mean, so far is good. No complaints. It's been doing really good. Yeah, I can't put three here like this. Okay, if you do that, well, how much room that you have here now for this fourth wave to breathe when you have one sitting here? Because if this thing is going to fall right there, there you go. That's your invalidation, right? Because your three wave now is shorter than one. What wave three cannot be the shortest wave. It is against the rule. Technically, the ideal target for the third wave, oops, let me say that slide, is this 161.8. This is where the third wave normally goes and end its course. 63.96. That's almost 6,400 on S&P. But I'm not projecting anything that far anyways, because this is talking like, I don't know, 5% move. That's almost, you know, one, two, three, almost like a 3.5% standard deviation move. Yeah, price is going up, but it's not like, I mean, I can open upside. It's not a problem for me, but I don't want to like throw numbers all the way up here to 68 and people get everybody so damn, everybody gets so excited, like, oh, wow, we just go in there, and people are just, um, I mean, I do post for Twitter and stuff. Just, I mean, I really don't do much, as you know, I don't spend much time there anyways. And 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 I'm gonna show some of these upside projections there, and people start asking me, oh, can we get there by December? Can we get there by January? I was like, what is that? What does that even mean? I just stopped doing that. I'm just gonna try to keep it as close as possible. Let's get there first, and then we'll worry about the upside. You know, the numbers looks all beautiful. Like, like from here, like all I gotta do this. You see how it opens up upside? I mean, now if you like, I'm showing you this, now you're like, oh wow, we're going to sell 6,700. And then you're like thinking right away, like, okay, I should buy a 6,700 calls now. Like, okay, well then when are we gonna get there? These kind of a questions you get. When are you gonna get there? Well, how do I know when we're gonna get there? Get here first, and then we'll, the same thing that I've been doing on those on Bitcoin, right? Get to this, and then we'll go up, which is here. I run this Bitcoin for you all, for everyone. Here's was the first target that I set. I was like, okay, let's get to 80 first. Then from 80, I opened 88. Got to 80 and I went to open 95. This is where all the mess is going on, because this right there is a 200% upside, the 200% fib. And I know that 200 fib is just not gonna break through it all in one shot. It's a very strong fib. This is your 161.8. This is where price usually takes a bit of a pause, because this is your golden ratio. This is the price that I'm after day and night. Okay. I want to get to 100. That 100 price can get to 161.8. I'm the happy man ever, you know? And then if the momentum of the price is really strong, and then it's trying to make a push toward this 200, that 200 goes to 261.8. This is where the 261.8 is sitting. I mean, look at the size of this swing to the upside. It's crazy, right? So this is where we had this back and forth kind of price action from the last couple days. Then it finally made the push toward this 100 mark. This swing, now, if you I don't have to label it, because a lot of people ask me this question, like, oh, do we have a wave count in this? I don't need a wave count. I can just do it for you just here like this. It's simple. Here's your wave one. Here's your wave two. Here's your wave three. Here's your wave four. And it's going to be some sort of a fifth wave. That's it. So can this fifth can go a little bit more? Yes, it can go hit this mark. Bitcoin is really, really good with fibs. A lot of people don't know that. I show you these fibs on futures every day, pretty much after the close. You break the green line, then you look for the next fib, but that's your target. You need to break either the green line or if the price breaks the red line. The price is gonna go pretty much almost there to the penny. Bitcoin, because I trade Bitcoin futures, it works really good with fibs, but you just need to know where to run those fibs, which you leave it on me. You don't have nothing. You don't have to worry about that. So, I mean, look, the average move for a Bitcoin this month is 5%. Remember, we looked at the data. I mean, we were flat, and then we just pushed right back up above that 100 mark. So now this is how much we are up so far in 1 week. This is monthly performance. This is for December. The average December, if you can see, since 2012 until 2024 is it's not much as compared to this. This is where the run was last month. So now if you take seasonality, put it with these fibs, it's starting to give you this range right there is where the price will take a pause somewhere and is going to correct lower in a second wave. Okay, so just to you can just go right there toward this 261.8, which is that 101, that's the 108 mark that I have right there. But to me, what it looks like is just this the 100,000 milestone that the Bitcoin hit. You see, like it dipped and just went right back up. It's just gonna try to hold that area for some time. This is putting Bitcoin seventh largest asset in the world, basically, because the 100,000 price of Bitcoin makes $2 trillion market cap of Bitcoin. 2 trillion. Okay, so remember that 313-ish, kind of 312 or 313 was the price for 1 trillion for Tesla. So then for the 100,000 is roughly close to 2 trillion market cap for Bitcoin. So rotation looks good. Um, Now, if you look at the relative rotation of this MSTR, you can see this one is losing more momentum on a faster pace compared to the coin now starting to form a hook right back toward the leading quadrant now. Coin is a better bet than this one now. That's how I see it. You have to you have to trade what you see, not what you think. Okay. Now the Bitcoin right there, which is this portion right there, as you can see, because these whipsaws, you can see like how the price starting to consolidate compared to this move. You see just how directional this move was. Like it's just accelerate right in one direction. Same thing right there when you starting this uptrend. There goes your three-wave correction, and then from here you just slowly, there you have a little bit of a um, it's a bit of a small narrow swing. You have 8.6, 6.2, 9.1, and then from there it went up to 49.3%. So you look at the length of this swing right there, 49.3. Then it came back down at 9%. Now it rallied back up to 14.2%. So it's um to this 100 mark is where Bitcoin is fighting most likely probably just to end the year. That's how I see it for now. It's just priced to kind of like sideways after this monster move, and then just to end the year, that's what the close to 100,000. And then the second swing will come, but if you look at the week to week, like the weekly rotation is very strong. You see like how this thing is going up. Look at the coin. MSTR is okay, but starting to show a little bit of a curve. I hope it's just trying to turn back up like this. But you have to look at things that this is 1 week. This can take you months to be in a trade. Well, I mean, when I do my daily wave counts and things like this, I focus on this part. Even when I make those weekly wave counts, I look at those RRGs and stuff and just try to see like if we're weakening, that's where it gives me the sign of either a second wave or it's going to give me a sign for a fourth wave. And this is from here, fourth wave, it goes toward the fifth wave. This is how I have everything worked out in my head. There's certain things that I look for, um, how to make a wave count, how to compare the thing with the swing, with the RRGs and things like this. I have my own style of doing trading, okay? And it pays, and knock on wood that I'm right a lot more than I can be wrong. And I just cannot blindly take one simple wave count and just put my money into it. I'm not that kind of guy. Just, I need to look at three, four different things. And then I will say like, okay, fine. I have a lot more odds in my favor. This is what I will throw the money in and we'll see if this way it's gonna go. And most of the time it goes in my way. Because all four things cannot be wrong at the same time. Are the chance is pretty low, right? Because I mixed everything all together. Because if you take a one signal and you put your money up on a trade, the signal can be wrong, right? It can give you a false break, false signal. But when you take a signal, when you take a swing, when you take an RRG, when you take fibs with Elliott, just the way to go. That gives me like, okay, am I on a right direction of a stock? Is it showing me enough momentum and the alpha that I'm looking for? Is my swing is right? Is the signal is in? And my wave count is going to go with those fibs. Fibs are all in. Elliott is all about fibs. Okay, it's all about fibs. So, and those fibs are are only going to come and play for you if you're going to count the damn thing right. Because if you're going to change anything, you see, everything on the upside will change. Your time will change. Upside projections will change. So this takes time. Not for me. I can count pretty fast because I have a lot of practice. But for some newer people, because you can make a mistake by putting one here and then two here, and then it was like, this is one, that will cost you some serious money as well, because now you're trying to go up and none of your fibs is gonna go hit that mark, because you're trying to force a second, like a smaller wave, and then you're trying to project the upside. So you need to know where your highs and lows are, meaning the higher highs and higher lows. And then you just when you then you're looking for the higher high swing, and then you need to see like, okay, how I can project the price using those lows. Because I have this thing here like this, because here's your August low. Has a 1, 2, 1, 2, right? I'm going to show you in a weekly time frame. I have wave 4 here, not here. 51.19, right? 51.19 right there. On a daily time frame, I put a 4 here because I'm making a running flat. Then from here, I'm going 1, 2, 1, 2. Because I know this thing for a fact that both ways are right. There's nothing wrong with it. This is a three-way move. This is going to be a running flat. From running flat, if you count from here, this is a five-way move. 2, 1, 2. You can go that way as well. But I'm trying to do both. I always try to keep both sides is because if one side is wrong, the other will confirm 100%. Like, okay, yeah, this is the right one. They both cannot be wrong at the same time. But the only difference is on this is because I'm looking at is 5% difference from this low to from that low, meaning to putting this green 4 here instead of putting as the August low is a 5% gap spread, right? So that 5% can give me some trouble here to the upside if I am on this path, but it's not going to give me any trouble going this way. You see my point? The both ways are right. It's not like because if one side is not going my way, I will know 100% sure the other one is going to be right. They both cannot be wrong at the same time. That's the bottom line. I can make two wave counts for you side by side, and I will guarantee you this thing that one side will play out, meaning that same price, but one wave count is going to be right. But I'm going to count it totally different ways. So you don't you don't challenge me on Elliott wave. Just don't. I mean, I hope this one goes this way, or if it goes this way, I'm totally fine with it either way. I mean, this count is totally fine as well. I mean, we could just do um, A here, B here, and C. That's called a running flat. From running flat, we can just count as a 1, 2, 1, 2 as 1. Here's your 2, here's your 1, here's your 2, right there. And then from here, you see like these fibs are all the same. 58, 54, 58, 54. This low right there is the same one right there, 56.91, 56.91. But I'm just only playing with this part right there to see if this goes or if that goes. It really doesn't make a difference. But I wanted to when I'm gonna project the upside, my upside projection is going to have that 5% gap, you know? So which I'm trying to see if it's gonna come this way or is it going to come this way? Then all I gotta do is just put this fourth wave like this and then just match it with this one. Okay, I hope you get my point. So if we keep the fourth wave here, go as a 1, 2, upside is 61.82. That's based on this. So if we go from here, you see, this is an extended fifth wave. It's how I see it from here. Remember, we talked about this. Diagonal here is going to give you the extended fifth wave. But but the extended fifth wave, you need to have 5 waves within the uh, within the blue 5. It cannot be a 3-way move. So you need to count 1, 2, 3, 4, 5. So that each smaller subwave is going to have those subdivisions. Like, this is a daily chart, so it's gonna take a long time. But I mean, this is way up there. But it's just trying to see like how I can be able to count this thing going up because these moves, as you can see, they're so directional and they're like much bigger in magnitude and length compared to all of these dips that the price is. Well, this is a big one. Like how shallow these pullbacks are. And that is totally normal for any strong uptrend. Every strong uptrend is going to have a shallow pullback. Every downtrend is going to have a shallow pullback as well. Okay, because the price goes under pressure. It's just, it accelerates on a much faster pace to the downside. And when price is same way, when it's going up, it's going up and up and up, and then it comes back down. The buyer steps in and like boom, it just goes right, and then pull right back up. So we go as a 1-2 here. I mean, this is what I I I heard, like there's a lot of banks and institutes are starting to put the 6,300 price tag on S&P. If you notice, it's just basically sitting right there, the 63-ish kind of area, 63.95, 63, so there's there's some room to run, but I mean, we could take a little bit of a pause. So, because looking at this, as I said, like what we doing every day, like what we this 2 point move every single day, two here, 604, like 604, 607, 606, 608, 607, 609. This is like a 2 point move every single day. But it adds up. A 2 point move here is going to move some of these stocks, but some of these stocks are just they're gonna trade on their own. Um, Qs are same. I have same August lows, 1, 2, 1, 2, and then we're trying to see if we can get to this third. So the point is like it matches, is side by side, and I really like it. You know, I don't have two different wave counts going in two different directions. I got them matched, and I really like it. That it's the same like 1, 2 here. We can remember this. We can just fit them like this. That's why I like to see them during the day. I only move them over to the other monitor. Just keep them side by side like this. See? So I don't need to look at anything else here. Just keep this one here on 1 hour, keep this one here 1 hour, and now you have two split screen, and then you look at the price side by side. If this gains strength here, so does this side, right? So it's a green 1, 2, 1, 2, 3, green 1, 2, so that's um that's where we at for now on these two. Um SMH, we already looked at them. I was gonna show you the IWM. IWM is right here in this second wave. The same thing I did here, I have same thing as a 1, 2, and diagonal here, overthrow in a 5. Came back down here toward this second wave. And then from here, took out a 3-year high of 244.46. Just barely made, God, 244.98 is the all-time high. A 3-year high was 244.46. And then talking like pennies, right? And then from there, we're pulling back. So the 6 days of whatever that we just looked at earlier is where we're gonna have to see where we can find support here in this too. I mean, if the price fails, I mean, we just gotta have to deal with that double top. I hate those double tops because um, price needs to take. I gotta go back on a bigger. Price needs to go back when it comes back up toward to make the new highs. I mean, I know that's where the resistance is sitting. This is where the price was under pressure for 3 years. And it took 3 years for the market to come back to where it was before at the peak. That's a long time to really think about, right? Not too many people have patience to even stay in a trade for 3 years. Well, it's easy to say about these time frames that people talk about all the time. Well, I want to go long term. What do you even mean by long term? What is your time for long term? Explain explain it to me. 1 year, 2 years, 3 years, 4 years, 5 years. What is your long term view of a price of to stay in a trade? Minimum, the long term investing is up to 5 years. If you invest in a good company, um, they make good products, that have strong balance sheet. It depends on the guidance. Business can take turns. If you think there is a company has a potential for a growth, um, 5 years you should be able to make good return on a good stock. That's how you look at things. But I don't see people can hold 5 years positions. They just one position is down for like 2 weeks. Most people are starting to get a panic attack. I mean, I don't know. Everybody's different. I cannot speak for everyone, but I mean, can you hold something for 17 years, 18 years? I can. I have positions that are working for 17, 18 years. I never closed them. I mean, they're up like crazy, but it's a long time. It's a very, very long time. Imagine how many earnings and how many crash, like, market crash and bear market corrections that I went with it, but I just stay the course. Because my point is that I instead of keeping the money in the bank, I stay invested as much as possible. And I know there is a risk, but I'm playing the other side at the same time all the time, meaning that I'm swinging trades, right? So I I talk about this thing every week. I mean, you can always do things on your way, what is right for you, but I do things what works for me. I manage over $7 million for people every single day. Okay. And for all these years that I've been a trader, I've been doing this thing for almost 18 years now. That's a long time. And I know what works, and I know, and you have, and if it works for me, and it should work for you as well if you do the same thing. And now if you doing trades on your own, I mean, that's, I'm not responsible for those. That's your headache. You taking your own chances, and you risking your own money on trades that you think has a potential to run up or whatever. It can go your way. I mean, I wish you nothing but best. It might go against you, and 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 that's where you're gonna have that big of a, kind of like the gap. But I lay everything out for everyone, as you know. I mean, but I don't know what else. All your job is just to push the button. I mean, I have. my own money risk, that I am investing and I am trading. And my only suggestion to you is you should do the same thing. I mean, just ride the ship and see how far, and we just keep moving. So, I mean, the point like I was trying to make is just you keep long exposure, like meaning that money should be invested in stocks, or you want to grab some leaps and things like this. But we're swinging this side as well at the same time. But it balances out, you know. If I don't have an option position open, okay, and like meaning that I cannot find a good trade based on an hour or whatever, right? I don't jump on trades, as you know that. My setup has to come to me. I'll take a shot. If it's not there, I'll wait. I'm not a guy who's the market open like boom. I'm just want to jump in. Oh, Apple is moving. Let's grab some calls. Nvidia is moving. Let's grab some. I'm not that guy. Jump on trades right away. That's just that's FOMO. You know, it's gonna cost you serious money down the road if you just make that thing as your habit. Jump on the market as soon as it opens. You need to let the market opens first. The Russell doesn't even open for 15 minutes. Do you even know that? Russell 2000 trades in the Chicago Mercantile Exchange. It does not trade in the New York Wall Street, NYSE. And when the bell rings, Russell 2000 does not open all in one shot. S&P does. All the 500 companies will open, but not the Russell. Russell opens in blocks. It has 2,000 stocks, and then what do you think all these 2,000 stocks are going to open right at the bell? They don't. So this is, I don't just jump on them right away when market opens. Like I like to see. I mean, if I have position open that I wanted to close, I want to take some. If the if the the take profit area hit, yeah, I'll close the position, or I'm gonna book partial profits. That's different. Swing trading is all here, and then here there I just play a couple lottos and stuff, and but I try to keep them pretty small as possible. I don't play in $1,000 worth of lottos, those earnings and stuff. Just pure gambling, you know. You gotta play like 10 of them to catch a one big fish, but those nine ones are just gonna really not gonna pay you anything. But there's gonna be a few of them that you just gonna get them, like they're just gonna go really good, you know. So, but nobody can predict those earning moves. A stock is gonna pop 30 points. Well, it's just the way it is. If you're in, you in. If you don't have it, that's not the end of the world. We'll find another trade. I'm always watching. So next year, I mean, see if we can try to make this thing work. Like, see if we can do the same way what I do. This is going to be all blank anyways. We're just going to move it over to a new sheet. These are the whatever that is open that I'm going to carry it over, and then I'm going to lay out new risk and see, and this is going to be all blank. And the point is like I don't know, talking to this woman last night. I even said to her, I was like, if you take $100,000 loan, it's almost your loan is paid off in 1 year, you know. But don't do it though. But like, I mean, I'm happy. I mean, it was a good year but I hope you did well, and just gotta keep doing what we're doing and try to find good trades. And there's gonna be a few speed bumps. They're gonna come our way. I mean, but I try to be right more than I can be wrong.
So
That's
Mo,
my goal is. Yeah.
so your so far ROI this year is 78.1%. What was the last year?
35-ish.
Oh, so this year is pretty good.
Very strong.
And then the December is going to be a strong month. So
Hope so. So
I
I'm
think
trying to.
You
Try
could go
these.
80%.
Yeah, I mean, if I would, if let's say if I clear everything out, if I can, I have unrealized 3,400 here on all this. So if I take 3,400 and add it up here, then I'm going to be completely all cash on this side. Yeah, that put me a little over 81,000. That's almost put me 81. I mean, this is only factored that what is closed, which is this side and this side. So these are all the option trades that I've been 1,500, 2,000 kind of risk that I took. There is no position here that I have taken that has a 2,500 to $3,000 worth of risk. I just don't do that. Not on this amount, not on this account. It doesn't matter how good my wave count is, how good the swing is, how strong the signal that I'm just not going to open one big trade and then go back down to the others. I might get lucky, okay, on the one that I'm gonna size up. I totally understand. It's not like I've never done it before. I've done it many times before. In a currency market, I've done it for 8 years that I open one position quite a bit bigger than the other ones. But then when you're gonna be wrong on the one that you're gonna size up, that's the one that's gonna hurt you really bad. But I just don't want to put myself into that situation at all. I trade comfortable. I take calculated risk. I know it's a number game. It's gonna add up over time. That's all is how I look at them. Bigger money is bigger headache. Trust me. I know that. Okay. I know, you know, how it feels to open up a trade 150 to 100, $70,000. I open them. I have trades open right now. It's insane to look at like how numbers are moving every single day, 20 grand, 27,000, 30,000, 50,000, 70,000. It's crazy how number moves, It's a big headache. I'd rather just stay like this, stay consistent and just go from there. But when you have such a massive account, I mean, 50,000 to 100,000, it's just peanuts, You don't really feel that way. But if you have this kind of amount, like 50, 60, $70,000 amount, I mean, you gotta be a little bit cautious. You gotta take a little bit of an easy. It will grow. Your focus is what? Is to grow your account, right? I mean, your priority for next year, meaning your goal is for next year, is to beat an S&P return. If you do that, you did really, really well. If S&P is up 26.73% right now, year to date, and if your account, whatever amount it is, 30,000, $40,000 account, whatever amount, it doesn't matter. It's all relevant. Okay. If your account is up over 26% year to date, you did really well this year. You should be proud of yourself. Every investor, I'm sorry, the institute out there is trying to do what? Is trying to beat this number. They want to outperform the benchmark, the main benchmark. The main benchmark is S&P 500. So all of your returns, your 401ks, the mutual funds, the pension funds, every single thing is being calculated by the by the main benchmark. You need to beat this number by trading, by investing for 1 year. If you don't want to have a headache investing in stocks or trading day to day, just simply buy SPY. Just leave it. And keep adding just like you doing the same thing with your mutual funds. Okay. So you don't have to do anything. Just keep adding every week or every bi-weekly. And let the market just do whatever it does every day and just don't even look at them. Market will just pay you the return. Market has a history of paying you 10% on an average yearly basis anyways. But your goal as a trader, as an investor, to see if you can get to a 30% or 40% growth on your money per year, you think is bad? How many people do you even know right now, okay, are up over 70, 75% year to date? I like to see it. How many people are out there who are fighting only this side, but they just don't want to look at this side at all? This is hard, okay? To grow your account with options is very hard. Just remember that this is the most dangerous asset in the market is option trading. Options are hedging. You need to stay long. This is where you're gonna make a lot more money being long on a longer time frame than this one from day to day. This is hedges. These are all swing trades. But the point what I was that I'm trying to explain and trying to tell everyone is this will come on a day-to-day basis. Because this side right there, you're gonna have your calls and you're gonna have your puts. This side right there, all you're doing is going up. You're building something that you want to invest in some companies and you just want to try, keep, like you can get some upside from there. You ride for a couple of years. But the thing is this, you can be up $2,400 on a trade. Here comes earning, and the position cuts down to 1,000. That hurts, you know. And then you have those doubts comes in like, why the hell I didn't close the position? You're like the big companies or like what your biggest risk, okay, on these stocks to own is the earning risk. Earning risk is where the stock can take some serious beating because that earning is going to come and that company is going to give you the next quarter guidance. If that's if they raise their guidance and if you in a stock that is already that you're already in profit, then you just stay the course. Like, okay, yes, the earnings looks good, they beat numbers, this and that, and they raise their guidance, right? So there are times that company is gonna go through certain time, like some hard time, and that's where they're gonna cut the guidance and stuff, and that's where the stock is gonna take the serious punishment. And you know what happens when you report lower guidance. Yeah, you report lower guidance, and stock is gonna take some serious hit because the price has to come right back down their toward their to the next quarter projections are. Well, they're lowering it down. I mean, if the growth is not there, well, then how can you expect the price to rip to the upside? So it's just like you investing in a business. So you just gotta have to sit and watch, like Boeing. You know what Boeing went through this year? Union strikes and people getting killed and this and that. Like it's always full of news, right? I mean, I can invest more money in Boeing, but I was like, okay, I want to buy a Leap. I'll just I'll just do a diagonal spread, you know? Call me $2,200. That's fine. Let's let it work. A lot of time in this one. I can play this thing for several months. Doesn't cost me any time. Now, some of you who have smaller accounts, they want to add those leaps and stuff. But you have to remember one thing that buying a leap, all you're doing is buying time. That time that you're buying, it has time decay as well. First, you're paying more for the leap. Second, you have a time decay. You can do the same leap, make a spread. It's going to cost you a lot less money, instead of buying a leap, and it's not going to give you any time decay. You need to open a margin account. If you're not opening, I don't know what to tell you. Either you're lazy or whatever. I don't know what are you doing. You need to open a margin account. It's gonna help you a lot. You can do the same leap. That's okay. You can buy a long. You can go out until next November, December, whatever you want to do. Just sell one against that. Okay, if you're long 150, okay, sell the 165. Like, sorry, if you long 165, you sell the 150. This is a diagonal. So you long 165 call, you sold the 150. Okay. That's a lot of time. I totally get that. But you can, if the stock moves up, I mean, Boeing should do well, let's say in the next quarter or two, it should be okay, right? But the point is like it's not costing me any time to hold these premiums now. Now, if I go and turn around and buy two leaps that cost me $2,200, I'm gonna have that 10, 11, $12 worth of whatever the depends on the time frame premium that I'm buying is gonna have that time decay. So every single day from starting Monday until next whatever November expiration that I have that time is getting added every single day. Why would I do that? Why would I pay for that? So you can do leaps, but turn them into a spread. So it's gonna cost you a lot less. I don't think 165 calls on Boeing. I'd have to look at the option chain out in November is only gonna cost you 22.35. It's gonna be more than that for one or two contract. Here you have three contract, and you just play the upside. It's all about the delta that you carried on a trade that pays you. The payout is going to be the same. It doesn't mean that one side is going to pay you more than the other. It's just a matter of like how fast the stock has moved to the upside. If you have 100 delta trade, okay, stock goes up 20 points, right? That's your payout. Now, if you have two stocks with 50 and 50 deltas, and it goes up 20 points, what do you think your account balance is going to show? It's going to be the same. So not every stock is going to have our name on it. We cannot, I mean, we can't catch every single move either. It's always like stock pops are like we always think like, oh, wish I had the trade open. When the stock wasn't moving for 4 months, you hate them. Everybody hate it. Like, geez, like I don't want to be in this stock. It's not even moving at all, you know? And then when it moves, oh, I wish I was in that trade. We all go through this. It's normal. And we just end up making emotional decisions, you know? Ah, screw it. I don't want to be here. You know, it's just, which is fine. I'm not worried about that part. Look how Shopify went up. Shopify did really good. I like Shopify. Went up almost like $1,000. Shopify, very clean wave count. Shopify works really good with fibs. Just trying to see if it can. So this entire move, this was one, two, up and three. That's your fourth wave. That's what I was trying. I was like, it's coming, pulling back here toward this 23.6 and 38.2. This is the earning gap, and they reported a pretty strong quarter. And I just like starting to watch and see like if I can we can get a bit of a pullback. And it actually went right to this 3.116, 1.8. That's the ideal target for every third wave, anyways. I mean, next one up will be 200 right there. And then give me that three, this three-wave decline. And I'm just like, okay, and this is what I got in at 105.70, right there toward this. I was like, worst case, if it's gonna come back down, retest toward this 99 kind of 100 area, I can buy some more, I'll just buy this zone. And then from here we can see if we can take out obviously the previous third wave high, which was this one right there, to make a higher high. So 105.70 is the entry. And then from here, you went right back here. And then we backed off. You see, just hitting the resistance. So I'm watching to see if I can get a hourly bar close above this high right there. Backed off right there. Then it came back down toward this another 38.2. And then from here, made another attempt. Failed again. See, these are all hourly bars. I was like, you know what? Just gotta wait now. I was like, three rejections here. This is the liquidity zone is. This is where the liquidity is sitting. I was like, it's gonna crack. There goes the pop right there. Finally. And you have a triple tops. A price just goes up, rejects, come back, make another attempt. It's gonna sweep that part. It's gonna sweep it one time. It's just a matter of time. So I got shares and no time running on me. So let's just wait. So we're right there to this 127 extension. So this will act as a support, the same liquidity area, right? So now we try to see if we could try to make a move toward this 161.8. And you'll see just make some, get some more upside from here. So that's how the trade is going so far. I mean, I can close it here if you if you wanted to take 1,000 and run, or you just want to go and um, see if it can get toward 124, get to 130. I just opened this trade like I don't know a couple weeks ago, whatever. So I'll let it work. It's doing actually really good because I was comparing Shopify with Amazon. I mean, Shopify is outperforming Amazon, to be honest. I mean, I understand it's not as big as Amazon, but to put two e-commerce side by side, I would say, like, I'll show it to you. I think Shopify it is a good bet to make. If we do So we do shop. What's the other one? Let's do Millie right there. So if we do year to date, you see, Shopify is outperforming Amazon and Millie. So Shopify is good. Amazon is coming close now. But Amazon just took off from here, remember? And this is where when I saw that divergence, I was like, let's get some Shopify. Um, I love Amazon, don't get me wrong, but it doesn't really matter. I mean, play this move up or this move up. It's the same thing. So that's Shopify is good. Um, let's look at some of these positions. NVIDIA, put a new trade on yesterday. Um, I saw jumpy. For the NVIDIA trade is, oh boy, hang on. You can see this stock split. You know, this I hate it. So it just gives me that headache. Come on, because the stock resets with the price on a scale. I gotta adjust this scale. Okay, this is good. So NVIDIA right now is just glued to this 140 mark, which is this June high right there, 140 is where this NVIDIA was consolidated for a very long time. Went from June, July, August, September until like October. It's a long time. And NVIDIA just went sideways. Now from here, when you have this long distribution, you should lead by, should have further continuation from here. I mean, the price did manage to break, but it's a very weak breakout, you know? And then it dips down, but if you just pay attention to this, that's your 140 zone that I'm talking about. You see right there is 140. Look what the price is doing right there. Down, up, down, up, down, up. It's doing right there. It just, this is where your liquidity zone is 140-ish area. It goes up, comes right back down. Just keep retesting this zone over and over again. It just, this is the old price of the 1400, right? Now, the plan is we got plenty of time, and it's a very strong name. Um, the plan is for this trade is if it has a pretty kind of big kind of like price overlap, as you can see here. So it's not really a clean one to like a real like a motive wave that you can count. I'd rather just put this thing in a diagonal like this, and then five with the three. Um, with the three is just same thing. You got one, two, three, four, five, and then you have it A, B, and C. This C right there came exactly right there to the origin of the diagonal. Remember I talked about 4 and 2. So that's your wave 4, and that's your wave 2. So that's your low was 131.80, and the low was 132. So like almost there. And then from here, price started to recover back up. We did that trade before, I believe, on NVIDIA. There we closed. I want to take another shot. Um, what I was watching this week, because semis are really not moving much, didn't really move much, I would say, compared to the Meta and all the other stocks. And it's just keep it sitting right on this 140 mark. Now, NVIDIA works really good with fibs. It's a very steady stock. Okay. Um, the plan now is for this trade to play out in our favor. is to crack this 78.6. So the high is 152.89. 78.6 is sitting right there. So this is the one we need to watch. And this is what I will be watching as well. If this breaks, then what comes in 152.89. 152.89 goes into 158.64. Okay, then those are the upside projection. But the point is, like, the NVIDIA is going to run in the next couple weeks. I have, if this is goes with this, okay, we're good. You need these two to work side by side in order for that trade to kind of play out. This is still a daily. I can go back to a 2 hour. It's the same thing. You see, it's the same thing. It really doesn't. If you look at a price on uh, on a daily time frame, and I just got to change the time here, go to 2 hours and 1 hour or 6 hour. It doesn't. Nothing is going to change. The price stays where it is. But all you're doing is just you're looking at a price on a much bigger time scale where you kind of starting to see this side more, and then when you just go right there, that side all hides, and you just focus on this part, right? So that's how you look at the price. I mean, I don't care about here, do you? I don't. That all. I'm worried about what's going to happen next. I don't care about this. It's all done. The move is already done. So if if so this is a plan. If if Nvidia can, well, right now the what, 141.91. Let's say if we can even get from here to hit this, it's gonna have some resistance here, I can tell you that. This is doesn't it doesn't really break instantly, 78.6, because this is the one is the basically is trying to stop to break the to take out the previous high, right? Which is 152.89. So we can focus on this part from 140 to 148. That's 8 points. Okay. That's gotta be a good healthy move. And if it's gonna start closing below this 140 mark, then we just gotta have to find some retracement around here in this area. Oops. Oh, man. I know this is gonna do it. This is why I hate when stock splits. It just doesn't work for me. Um, so what we can do is, let me just clean this. This part. So we have this. So now we need to fit our smaller waves. So we don't want to worry about that part for now. So we can do is make this, put this thing on the side. This is exactly what I just bought up. I had them yesterday. I don't know what happened. Right there. This is what I'm buying. I'm sorry. This is what I bought. Right there. Because I wanted to see, because I've been watching the video. It's like it's just this 140 area. This it's just a price is just like confused and just you know um trying to make up their mind. No, if if Nvidia can hold this area, 130-ish, 142, this zone right there, and then we just try to see if we can target this 148. That's what I would do for now. And watch for this 148, and then we'll see if we can try to see if we can get take out this high right there. I mean, if we do, I mean, the worst case is that if this is not a two, okay, if we just have to, let's say, go like this, that's another way as well. Just take one more leg lower. You see, everything is gonna move to the upside. That's why I don't project stuff too far out. This will be the alternate. So you just kind of like take an A, B, you take one more push down in two, and then from here you find support here in two, in this zone, like this, and then make a move back up. That will be the alternator. That will give us punishment on the on the premiums for sure. But again, we don't know which way it's gonna go. I hope it just this is all it is, and Nvidia can try to fight this 140 area to see if we can get to a 148ish, 148 area. So I don't. But the thing is, there's this. I don't see, especially a stock like Nvidia, such a strong name, or any other stock, is to stay sideways for 4 months and just do this. You know, no, I mean, price is gonna make some room to the upside. You don't consolidate for that long and just to go up for like 2, 3 points, like 5, 6 points. You know, it just that's where price is trying to. I can buy something else. I mean, 43 days is a lot of time, but if this move is gonna happen in Nvidia, it's gonna shake out every semi stock. That's that. Remember that. you know, and this is Nvidia takes a 11% dip, 12% dip toward this area right there. Oh yeah, it's gonna it's gonna roll over SMH, stocks, all the other stocks. But I'll stay like this. I need to change my goalpost. It's not how you do technicals. You should be you should be always feel good about your entry. Okay? When you buy something, you should be always feeling good about it. You should have confidence what you do. What can happen, we'll deal with it. That's not your job to think like, oh, this gonna. Well, if you have those doubts in your head, you shouldn't be in a trade to begin with. Okay. So why I like this, and I'm gonna give you a reason for it. Why I took this trade. Because I don't explain reasons to people, to you guys, when I take trades. Okay. Because I don't have time for that. Because I open the trade, you in, you in. Now, why I like this 140, okay, and this will move, okay, with the help of this. Here's NVIDIA right there. So for this second wave that I showed you as an ABC, okay, has a very less probability for me to make that case when the same time when I'm starting to see the momentum and alpha okay, is starting to improve. So this thing going this way is not gonna happen. You know that. Worst case is this, is that Nvidia can go this way a bit more, but it's just gonna if it's gonna do that. What I mean by that is this: that if Nvidia from here goes like this, that where you're gonna have a weakness on a stock. But from here, the stock is gonna make that move. It's gonna push Nvidia further away from the benchmark. And that moves will happen on a stock like this, which is at such a monster market cap. It's gonna make a much bigger circle. You know, Nvidia is a good bet. This is why when I saw this yesterday, this is when I opened the trade because I'm watching these things all the time. I know which stock is doing what because you guys more focus on the actual price of the stock. I'm actually looking at like what is actually driving the stock, right? I missed out on this. I hated, kicked myself. I had that wave count laid out so well, I just didn't take a chance. I'll show it to you. Just rotation was sitting right there as well. It's just like, oh, that 20-point move that Meta made, and then ever since it just keep on ripping out like hard to chase a running stock. Saw the video before Broadcom earnings? No, why? Oh, because you think in the Broadcom earnings gonna tank the video down? Not that much. No, I'll be fine. We could hedge it. Broadcom reports up and the video goes up, we're in a good shape. But the video Broadcom is strong. Let's see. See? That's why the Broadcom is moving. I bought them right there. You see that how far away it is from like look at Microsoft, look at Meta, look how far Broadcom is. You see the move the Broadcom just made yesterday, the weekly bar? Huge. That's what you want. You need alpha. More the alpha, bigger the payout, bigger the move. We need big moves. We don't need some lame ass moves on a stock. The grinding part, those are painful. Options, we have the time drawn. We need a stock to move. So, so that's why I got it here because this weakness here is where the um rotation is gonna improve from here. It's already pointing now. I mean, it is some good stock. If it's trying to move this way, it will because it's gotta complete that circle anyways. So should be okay. I mean, worst case, if it's gonna take a leg, what, 43 days, a long time. Oh yeah. I don't know. N- I mean, like, I'm actually, I was thinking about one that I don't know, just I've never done it, but I don't know, I might do it next year. What I mean by that is like, I'm planning to buy 7 leaps, okay, on Mag 7 for next year. or as soon as the market opens on the first of the whatever, 2nd of January. Hope you get my point. Meaning that I'm gonna set up 7 leaps on Mag 7. Either I make a spread with, I'm gonna make a spread because some of these stocks are pretty expensive, especially like Tesla. You can't buy they those things are like $4,000 or $5,000 for a leap. Like make like a $1,500 worth of leaps on each stock. So you have 7 stocks times 1,500 per trade is gonna cost you almost 10 grand. Or I can do 1,000 a leap, but this your payout is not gonna be. Plus, you have so much time, and just to buy a structured leaps with a spread. I'd rather do a diagonal spread because it's gonna have no time to no time to. Sorry, I'm just my nose was running since last night. So I'd rather do a diagonal spread, just completely eliminate the time, and go out all the way until December of next year into the Christmas time, right? That's the time that we're now, that will be next year. And just to buy them exactly where the price is at and then see how the Mag 7 performs and those 7 stocks for the next year. That's my plan. I'm thinking about it. I never done this before, to be honest. I'm just something that I am thinking about. It will be a Tesla, Nvidia, Meta, Google, Amazon, Apple, Microsoft. So he's gonna have all of these Mag 7 stocks. And as soon as the market opens, I still gotta price out those strikes. And the market opens because everything's resets, right? Like everything goes back to zero basically because you're starting a new year. And then see how many of these Mag 7s perform based on those spreads. I think that will be a good way to play the upside on Mag 7 or through the options. And just if one stock happens to go up 50%, 60%, I mean that will be really good. Yeah, I mean, we should be all looking for Nvidia weakness hands down. I mean, this company has insane growth. This is not an overvalued stock. This is not an expensive stock. Okay. This is the cash machine. Just people just don't understand and don't realize this thing. It's a very good company. I mean, don't semis, that's the bet I will make all day. Broadcom, yes, no other stock. Seriously. I am not. Those are just I happened to play ASML this week. No, yeah, this week, yeah. I moved pretty fast, pretty quick. I was like, wow. So that's the plan for NVIDIA. So I'm just watching this. This is good. I'm not. So if we're going into earnings next week for Broadcom, I think the Broadcom earnings for next week looks good. I mean, again, anything can happen. But but I mean, worst case, if Broadcom comes back down, I mean, I'll just deal with that. But I'm just gonna focus on these 2 stocks. Um, let's talk about this AMD. I know. Okay, let's talk about this big. I hate this stock. Seriously, I'm just gets on my nerves. It's the same case I have here. Okay, this is gonna be a do and die level that we're right here, right now. There's no other way. This is a low right there. for the year. So this is the year low. I can count a diagonal here. Same thing here. You have 5 up and you have 3 down. That 3 right there literally went all the way down here toward this prior wave 2, right? It's how steep this wave 2 is. So which was near the 78.6. Didn't really hit that mark, but it was like a point shy off from that number. Now from here, when I know for a fact the resistance is where? Prior fourth wave, right? We keep talking about this thing over and over again, and I can show you 100 different stocks, okay? And I will tell you exactly where the price is gonna go hit that mark. Is gonna be your wave 4. We reach that point, and how many of these tests that we just made, and we just really couldn't really clear that, and we just backed off again. So now from here, if this is 5, this is an A, this is an B, this is an ending diagonal in C. This is the only way you can do it because there's too much price overlap. And then from here, we need to count 5 up now. So we can make a case here for wave 1. We can decompose this thing, put like an A, B, 1, 2, 3, 4, 5. So there's your 5. Why is it green? So here's your 5 waves. This is the second wave now. That needs to find support right here in this zone. If AMD breaks below this 135, this thing is wrong. I'm just gonna accept a loss. What I mean, it's already a loss right now, anyways. But I just gotta swallow it and just move on. Screw that stock, and I'm done. Whatever happens goes up. I just don't care, and I really don't want to trade this stock anymore. To be honest, I just don't. It's just it's a horrible performance of this stock, and I showed you 3 years, nobody hasn't paid you a dime. So sitting in the stock, and if I mean now the only way this thing is going to play out and is to see if the stock, it retested yesterday at 161.8 and get like a 1 point move higher. I mean, it needs to find support here, and this is a must hold zone because the 78.6. This thing cracks, yeah, you're gonna this thing is gonna go toward this low. I would have no doubt. Back to this 121 area. So I'm gonna watch this one for next week. I'm gonna keep the finger crossed. I hope this rallies try to make that push to clear this liquidity zone now. Okay, right there. This 142-ish mark, 140, 142 mark. Then from here, if the price stays here, I can run the upside projections from here. 100% is at 148.93. 150 is this resistance. Why this is the resistance? This is where you had the first decline. We rallied up, lower high, and there we made a lower low. So this is 150. So you see that serious resistance sitting here on this part right there. 148.93. I won't even open this one for now, to be honest. Right, for this. So this one, big got some work to do. But this has to hold now. And I know we're just getting short on time as well on top of it. So I mean, if it works, it works. If it's not, then well, I'm gonna take a loss and move on. Just been tough, really, really tough to see like the stock is up like 14% from the 52 weeks low. The stock is down year to date. I mean, 3 weeks were just Amazon came yesterday, like we don't even want you. So so we just um to see if that's the plan. So I'm just gotta leave it and wait for it, I guess. Um, Q's SPY Tesla. I think when then we don't have that much. I think we went over this rotation and stuff. I mean, if we look at the daily rotation, I mean, we just looked at the um, how the small caps are doing and how the value stocks are doing. I mean, look what energy is. Okay, here's financials are starting to take a breather. Looks like it. Here's XLY. Here's your Amazon is doing all the work and Tesla. You see how it forms a hook back up? Real estate, materials. Here's your XLK right there. I think Mag 7 is the one to be in. Nothing else. Industrials are, Uber and FedEx got under pressure, so it's a good thing that industrial is not really taking a crazy rotation to the out from the outside. Like, it's much closer. So it's gonna have a not that big of a beating. See, healthcare just defensive is thing is running out of gas because this is difficult to play defensive sector when the growth and all the other stocks are taken off. So I'm kind of hesitating, like trying to. I like J&J, the baby lotion, but I'm just not doing anything to it because healthcare is just, you know, gotta gotta spend some time working on a bunch of things. So you see industrials, communication right there. That's where your Meta, Google, Netflix is, and technology. And here's your Amazon and Tesla. But everything is kind of like turning bit, rotating out, going into a year end. You know, energy I can have it here. Doesn't energy can be? It's kind of tricky. I don't know. Energy could be a part of growth. I mean, energy does hedge against as a defensive as well. The spike in oil and all that kind of stuff. So it could play as a defensive role, but it really doesn't matter if you put here and here. It's gonna show the same way anyway. So I have it here. So Restar, look at financials. Jeez, 33% year to date. XLY 31. Real estate 8%, 7%. Energy 7. XLI, industrial, technology, communication, healthcare only 3.969. Jeez. Yeah, okay. So I don't even know what this Kennedy is gonna do to the healthcare stock next year. I'm not just gotta wait for a little bit for this quarter. Let this guy come in, get a couple shakeouts and stuff and see. I like to pick something in healthcare to be honest. You know, I'm watching this. Let me show you this. J&J. It's a nice count, But if it just now it's gonna hold. It's the same thing. I could I could have diagonal here, up in here, sorry, one, two, three, four, five. Such a huge wave two. You know, it's just normal. It's okay. You know, wave two can because it's considered as a counter trend move that moves against the trend wave. It can come as much as 7, 8.6. This is exactly where it is right now. You see right there? So this one right there is I could take a shot if of J and J right oops right here, you know. But these are the very, very I don't even know what I did there. Um I can take a shot here in this to see if we can this is got some serious work to do to make a room back to the upside, you know? So I haven't done anything. I'm just watching. I was like, this is not giving me any. Yeah, I hate price action that rallies like this and just goes like this. You see, it just doesn't have like like rallied and like completely fading. Then you just fade the entire move back down. You know, it's not a healthy side for the price action for me to be like, okay, yeah, I should be in this time. You know, like if something trends like this, I like the best healthy looking charts, okay, are when you have an uptrend and it goes like this. Accumulation to distribution. And then from here, you can make a bet to play to the upside. You know, if you have a price that rallies like this and then it takes a turn like this, that's tough. Because from here, what you're trying to do now, you're looking to draw another channel, the price to go travel like this. So you see, I mean, it's just a lot of work now because all of the downside that you just took all, this entire move that you had from the low, which was from here to here, was almost 18%. From 18%, you just give back almost what, 12% out of it? So you only got like 3.5% left to the lows. It's just not a very kind of like a healthy looking chart. It's a good company. I mean, it's a Dow 30 stock, but But healthcare rotation now is turning, I don't know, could just keep pushing lower. Plus, this thing right there is making lower lows as well. This is I don't know if you guys have that. This is called EW oscillator, EW, which is Elliott wave. So this oscillator works based on the waves. I have it set for 30, 34 and 5. You see, like, I can color the same way up there, but this is a tool motive wave have. Um, on on their thing. I just keep an eye on them, just to see how the escalator is working. Yeah, this thing is not in Optimize and all this. Is for this only for Motivate. Look at ZS. ZS is good. So I think it's a very good. Oops, it's dark. It's a good looking chart. This is when I they reported they reported a very strong earnings. I don't know if you guys get a chance to look at them. They I mean, it's the stock is not that old. Okay, that company is, I don't know, 6, 7 years old, 6 years old or whatever. And it's a pretty nice, like a clean looking move. While I have it here, I'm not gonna start a 1-2. There's no point for because the stock is not mature enough, to start like a cycle degree wave count. So when you don't have when you're working on a chart that is like a company is like 5, 6, 7 years old, you cannot expect like cycles will take like 10 decade, to complete one higher degree cycle. Like a stock like Apple and stuff, yeah, those are much older companies. Like these kind of 5, 6 year old companies, they're like a baby growth companies, they have the potential if they do well. Yeah, I mean, this is something that you could consider to think like, you know, the company will perform. I mean, 1, 2, 3, 4, 5, A, this down your B. The B is right there at 50% retracement. That's just a typical retracement for the B wave toward this high anyways. This is a pretty good looking chart. And right there. And from here, this channel broke, made a move higher toward this midline right there. You see a lot of stuff you don't see in when I post charts because there's a lot of stuff that I do on my own. Um, Found a resistance right there between the channel, backed off, and from here, what I'm trying to see, this is a round bottom, okay, toward this point right there, toward the mid. Because this mid right there is the same mark right there, right? So it just continues. So it just goes here, backed off, backed off, backed off. You see, it just repeats one after another because that's the mid of the channel. And from here, but the only way this thing is gonna starting to make a move higher. Well, we have what? We have a pretty round, nice round bottom, and we have a handle, okay, right there. And it's starting to look pretty promising that this handle is gonna break. So the bet that I'm willing to make on this stock is to take this move, project it from a 50%, and then we'll see if we can make some room back toward the upside. Now, how we gonna go back to the upside is we gotta take out this high, which is 259.61, right? This is where we took that decline here. This one is gonna give you this 78.6. This is what I wrote right there. This is your key breakout zone right there. It's gonna make that attempt at some point. So if this breaks, then we can just look for this toward this high. It's gonna take a long time. So you gotta be super patient with I mean I could buy some leaps or whatever. You're looking at 77% upside from the current price go toward the all-time. I mean that's some healthy look. I mean, if this plays out, I mean it will be beautiful, but it's gonna take time. Um, if we could even go and test this high to 259, that's 22% upside for this stock. And then from here toward this 278.6, that's almost roughly close to 30. So you have a 22 to close to like 30-ish up till here. And then from here, you basically just double it, more than double it up till here. But this is where this needs to break. So 78.6, then we can look for a higher high right there. So this pattern plays out as good. ABC, simple zigzag move, 5 up, 3 down, 5 up. That's a second chance, right? Second odd. Cup and handle is one. I can see how the channel, what channel is doing to this price here anyways. So it's just a matter of see if we can, they reported good guidance. That's a good positive. They raised their guidance. The earnings were good and they raised their guidance for the next quarter. So the company is good. I would actually somebody was talking about that thing on CNBC Fast Money yesterday on uh, on Ziegler. I didn't even post this thing to anyone. I'm not giving away those freebies. I noticed a lot of some of these guys that are getting way comfortable on the Twitter post. So I'm gonna limit them and just focus here. Um, and then yeah, that's the plan for this one. So I'm gonna give some time and see how it plays out. Um, last or least, no, what are we gonna do? We're gonna do Meta. And I missed that move. I hate it. I hate myself. Look at this invalidation was, oh man, just 550-ish, 544 stop loss. That would be a hell of a return. Move back toward the highs. Such a tight risk. Okay, here's Meta. Um, so Meta is on a run for a third wave. Okay. So 1, 2, 3, 4 was right near the 50% retracement. Then from here you got 1, 2. This is 3. Now, if this 3 is done here, we can do this as well. Like this is 3, this is 4, and now this is going to be the fifth wave. Now the fifth wave can just, if that's the case, this fifth wave is most likely gonna push because of the diagonal in the wave one. That's why the price is gonna accelerate. It's always a difficult for the price to just kind of pushes like this far. Like where the hell the third was ended? Because third has I can put 3 here, or if this is, or I can just put 3 here. You don't know exactly where you put them until you have a bit of a pullback. But the only pullback that I see is this. So I can put a 3 because a 3 can end anywhere between 161. But it can be. It is not necessary that it has to hit that print to the penny. You can come close to it, and you can just then the fourth wave is starting to come back now. But but I can't. But when I set my targets are based off fibs. Those are because you're projecting the upside. Well, you want to project the upside, you're gonna have to have the print as well, right? So even you're gonna have the print, so either you wait for a 612 or say like, okay, the price is at 610, I'll just take my money. So you could be right, that is the top. And then you have a fourth wave starting to come back down. So you're always gonna have those decisions that you have to make. I mean, yeah, the ideal target always gonna be 161.8 is gonna hit. And then when it's starting to poke above it, yeah, then you will know like, okay, the price is picking up. So I mean, we can do this, wait for this third, and then fourth, because the 5 versus 1, meaning the distance travel, the 5 versus 1 is 662, meaning that the distance travel here projected from here to here is 5 versus 1 is 662. Again, it is not necessary that it's going to go hit the 662 mark. But if I will have to use all these the fibs from here, so these you just gotta you see all of them at different fib because I can run them from different swings. So you just look for these prints. That is good enough. Now where goes the pullback? Well, I don't know these pullbacks, and nobody does. You know, you just you just gotta have to see where the stock settles down, kind of pulls. I would really, I mean, I don't think it's gonna. It's a 630 right now. It didn't. It took out this high. It didn't really retest it. I mean, it came pretty close, but yeah, I mean, it was very close. Didn't really retest the breakout. Those those are those are the best breakouts. Are very tricky. You gotta have to watch them really closely, like how they actually. When you have a top like this, the price comes, fails, and then finally it breaks. That breakout that is gonna happen after double, triple top, it's gonna be a strong one because it's trying to clear the liquidity zone. That's what the price was keep rejecting, right? So when you get that push like this, a price mostly come right back down toward, and it's gonna retest that zone. Okay, so the resistance that you have here, okay, which has been sitting, it could be like this, and then on the third you just break like this. So usually price comes right back down and retest that. So your broken resistance acts as a support on the way down. And this is the area you gotta watch really closely. You don't want to start seeing daily closes closing below the price is trying to close below the zone now, meaning that the price trying to close like this. You know, then yeah, you're gonna have started like, okay, you know what? Yeah, most likely the run is over. You want to stay up, meaning that your channel has to rise up, not kind of tilting more to the toward the downside. You want to try to keep a channel with up like this. More you have more directional move to the upside. Yeah, you want to have something like this. I mean, yeah, the price can travel here. It's not. I mean, it is a trending channel, but it doesn't have this kind of look. You see the difference between this? Our price can rise. Don't get me wrong. Price can make higher highs and higher lows. But when you have this kind of a moves, this is more directional. You see, like the channel has a rising look to the upside. So I don't know. I mean, price is making new highs, so Meta is strong. Communication, we just looked that up. That is starting to rotate back up as well, along with tech. I think Mag 7 is getting that final push this month, and semis are just going sideways, you know? So that's how I see it. Next 3 months, I think we should be rather more focused on Mag 7 than unless we're gonna have that we're gonna have CPI next week as well. So the earnings that we have for next week, we have Oracle. What is gonna be MDB. I like this stock. Really, really like that stock, but it's so difficult to count. And I'm gonna show you in a second. Casey Johnson, AutoZone. Oh, here it goes. Here goes the Ruben stock. That's garbage. Start this. Macy's. They're still doing their Cyber Monday sales. Adobe. Here we go. Adobe, Costco, Broadcom. So these are the five names. RH. This is another one. RH, Costco, Broadcom. Three of them are here. Adobe here. MongoDB here. So these are the ones we're gonna and Oracle. So I got 1, 2, 3, 4, 5, 6 stocks to watch. Yeah, this one. Here's the thing with this MongoDB. I wanted to. It's so difficult to count this move. I don't know what is that. To be, I like this one. Don't get me wrong. Boy, damn, some of these, I gotta push them out a little bit. This move here, I like this. It's starting to form that thing. Like, this is the earning gap and stuff. But the only problem I have is to how to count this thing is very kind of like challenging. I mean, it's a good company. Since the company has taken some beating, and I've been watching it ever since. I mean, the stock looks good. I mean, if we go back here to a weekly time frame, it just it's just a long sideways choppy looking chart, right? Forget about all the labels. Just look at a blank chart. And I don't do anything here, but I can. But it's to take the all-time high, which was 590, down all the way to 135. So this stock has took a 77% decline, managed to rally it all the way back up. So if this is the high, we can take a three-wave decline. From a three-wave decline, you get a five-way move up, right? Because you need to establish the trend established, right? After every three-wave correction. So the three-wave correction that goes up with the five-way. This is a pretty clear five-way move, as you can see. So you have diagonal one, up, down in two, up in three, triangulation in four. Here's your five. That's a completed five-way move. Well, then there goes your second wave, which is going to be a counter trend wave that moves against this trend wave, right? The motive wave. That came all the way down here toward the, sorry, towards this one, which is 61.8. The ideal, like, there's no time, like the exact kind of retracement for second wave. Second wave can retrace 38.2 down to 50. You can stop them in the middle, come down here. It can stop them anywhere. But our typical, like what we as an traders look for the retracements, we're looking for 50%. The 50% is basically this entire move that you had that cuts the rally in half. It's just at the midpoint. So most people, most traders, I would say, like to get into a stock that comes with a 50% retracement. They're starting to build up positions here, 50, and then they're like, okay, well, if the price is going to come down to 61, I can add a little bit more here, this and that. It just, if you're in a trade, you're in a trade. I mean, if it's going to come down a little bit more, doesn't mean you're just going to start throwing more risk, you know? But I do like it, and I am willing to take a chance on earnings. Like, I'll play a lotto, I would say this. Um, but to count this thing off the lows is not easy. So now we're gonna get out of that day from weekly time frame. We're gonna go to this daily time frame. Here's your low right there. 212.74, 2.1, but this is almost a double bottom, like, And then from here, right there, I have this thing counted as to see if we can just make a case for this stock to go back up. Wave one, wave two, and three. Three is bigger than 100, which is fine. And then here's your wave four, diagonal in five. So we can count this thing as a five. Here's your three. But how to count this nightmare? I don't know. Because this price just has too much overlap. A third wave don't travel like this. You know, you can't because it has third waves are more directional. They excel. I mean, it reached 100%, which is fine, but it's just why are you gonna count this as a five-way move when you have these kind of massive overlaps? It's a tough read for me on this stock. And I try to not I don't trade stocks if I don't have a good read on a stock. Why would I will just find something that makes sense where I can put money into it. I'm not gonna just because I like the company, okay, well I need to trade a price where I can make a right and a good looking wave count. Well, we don't have that. I mean these moves right there, you see there's a lot of overlap. Yeah, the no third wave will ever forms like this unless this is some sort of a large looking. I don't know what is this. I just you can't really just trying to think like you do one, two, three, four, five. Then if that's the case, then you need second wave again. So the stock might you can do this. Let's say you do leave some room there. Let's say you do this. Oh, come on, like this. So you can just make this as a diagonal, like this. That's you can do this. So if that's the case, then it needs one more push because you have five up, then you need this move down. Then you go up and overshoot here. No, it's just yeah, I don't like if I cannot get a good I mean, I'll fix them one way or another, but what I see here is it's the stock is trying to is it a some sort of a cannot be a fourth wave either because it doesn't have much price. You see, like when you do this, it's gonna give you a just I don't like I mean, I like the company, but I understand it can go higher and I'm gonna pound the desk that I was not in there, whatever, but I just don't have a good read. It's a tough read on this stock. Yeah, a move like this is much easier and kind of much easier to label and it just gives you a much clear direction. But this part, just it's a mess, you know? I don't even know what is that. So, I mean, if I have an itch, I don't know. I'm not because the premiums in this stock is not that cheap either. Stock has liquidity. That's the good thing. And these bars are getting thicker. The price has liquidity, but I mean, you see, this one made a low. Otherwise, I would just lift up the account from here, wave count from here. And these lows are different. I can't use this low. I need to start from here. 1, 2, 1. Well, the only other thing is this. We can do this. Put two here. Get rid of this whole thing. Now we can do this. That's the only way you can. Now you don't make. No, not gonna work. Sorry. No, 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 no. Oh, where's the? No. Hang on. Boy. You see, it's just no. Five has to be cannot be diagonals cannot be truncated. Absolutely not. Fifth wave has to go above the prior third wave. Diagonals can never be truncated. You gotta remember that. Yeah, you see like how these no. Come on, man. It's hard to lift up that this count from the lows. See, now you don't have an overlap. No. I would just go with the one that I had before. Go back. Gotta worse this thing back up. Like this. That's the only way I can leave it like this. Is to because you can count this as a 5. Here's your 2. Then you just have to make a case here for a diagonal. Diagonal is going to give you a very shallow. If this stock rips on earnings, it's the only way the stock is going to go up from here like this. This is all of 2. Very shallow 2. Just came right in between. And then from here, stock can make a move. Very small. It's just because from this low, hang on. No, I don't give up that easily. Just wait. Let me play around with this thing. If a clear 5-way move. You know what we can well, this is a possibility. Make this as a running flat. So you got this as a running flat. Your wave card has to have a right look, otherwise it's not gonna work. It's gonna look weird. I mean, it's good. And then from here, pick this one as a diagonal. There you go. Now we're shaping up. Just gonna have to take a second look sometimes too. Yeah, there's your bowl case on this stock. Now it's fine. There you go. So you got 5 up, 3 down. That's your flat. Seven, 8.6, which is fine. Now this here, that's your 2. So you have 5 up, 3 down, and then from here you can count 5 as a diagonal with an overthrow. This if stock goes or if it's gonna change the whole thing, you know. So this would be the if we would have to project the upside for earnings on Monday. We can 100% is at 313, and so this will be the oops. This will be our zone because if this third goes, it's gonna go because it's looking for that third now. But that's where the earning now has to do the work for this stock to get them out of this. That's the move. That's now the wave count can have a right look. It's very important. So if you're gonna roll a dice, you know, so that's your 5-way move up, 3 down, smaller. Yeah, it's good. So now it's fine. I was just labeling, I was just thinking. I was like, which way they gonna do it? Here, so this is your low right there. Oops. 212. That's your high. Because what I see here, this is what I'm trying to, because when what I don't had, I'm just like looking at this liquidity zone, you know, this. This was the high, rejected, rallied back up, rejected, poked above, failed, false break, failed, and now it made a move up. You see how long it took from September to October, November, December. It's a long time up till here. Now it sweeps that liquidity from there. And this when you gonna sweep liquidity up, like you're gonna take the liquidity out, it's gotta be a third wave because you need to clear that, right? There's always gonna be a third wave. You don't normally break up with a first wave or a fourth wave. Those are not because fourth waves are consolidated. This is where the price consolidate, right? So you need a powerful wave. Your powerful wave in a trend wave is always a third wave, right? All my life, pretty much. That's all I chase for is a third wave. I want to ride the third wave because it's just the most powerful wave, you know, that you want to get into. Like you have a 5 completed move, 2 counter move. This is where you want to ride this ship to the upside. That's what you want to catch, you know. But this, with this, takes time to complete. But you just have to keep looking for stocks where you have a 5 completed move with a 3-way move down, and then you look for that third way. That's when the third comes into a play. Yeah, it's not. And, but you gotta sit and label the way I just did it for you in front of you. You have to think how to make a 8-wave swing for you to consider a price that you could project the upside, and then you're willing to take a bet and see if the thing is gonna go your way. You know, so 340. I mean, a $50 bet is gonna be huge. It's gonna be cheap. Well, I'll keep an eye on. I'm gonna have to look it up and see. Oh, I'm planning. I like this stock. I'm planning to see if we can take an earnings swing on this one. Oh, the Daku didn't play out. Oh my God. Massive rip to the upside. Should be, should play something above. Got a target like 350 area is to take out this high, and then it will push. Gotta break this high. If it's gonna go south, there you go. It's gonna take that. This wave count from here doesn't technically valid until here, but earnings is when the price really takes a serious punishment anyway. So so we'll see. Last to least, Tesla, and then we're done. I'm gonna my nose is all stuffy now. Um, so I mean, 212 low, up in one, down two, up in three, 161, running flat. Okay, three down, five down, right? So it could be a triangle, whatever the case was. So this is a running flat. So the running flat from here, now we need to complete 5 smaller waves, is to complete 5 waves of one higher degree. Okay. So same thing happened here, that made a high, rejected, doubled up. You see how many, and then finally Tesla managed to clear that zone yesterday. Um, what is the further upside from here? Now the invalidation for this wave count is gonna go up to 360. Okay, so 360 is because whatever this wave 3 is, it could just end here. It can go up to 161.8. It can go to 200%. It can go as high as 447. We don't know that. But our projections are all here. So we already cleared 100. It already went above 127 extension. Now it's pressing toward this 161.8. I believe that's where the price stopped yesterday, right there, 394.67. So this one is already in play now. So with this 393, which is 161.8, if this breaks, then we can look for this third wave, which is 161, which is 406. But again, keep that thing in mind. It doesn't mean it has to hit that mark. I mean, it can stop here. But when you're looking at the projection, the upside projections, those are your potential targets. Okay. You trading probabilities. There's no such thing a guaranteed in this business. If I wish that was the case, you know, but you should be, I mean, I don't have an option trade open. All I have is shares. But if so, a third can come to here, it can go as much as 200%. It all depends. Okay. So how, because there's a third wave, it's gonna move. And then after that is going to settle back in this fourth wave, which we will pair that with this swing right there, which is pretty tiny, but it can take a day or two to complete, or three. Um, so I deal with this, and then from here you get the five completed waves is to complete one higher degree, and then Tesla is gonna be due for some sort of a second wave next year. The only other thing I can think of, which I mean, it's just gonna be really weird, is to put one here and two here. I really don't like to do that. Because you can count this as a one, two, three, four, five. I can make this thing as a diagonal, but making this as a one, two count, no, because this two right there didn't even retrace almost 23.6 of this entire trend wave. That's just you forcing labels. It's just not gonna have. What I mean by that is this: you take one, two, three, four, five. So this blue right there, you just put it here, and you just make this thing as a two. You cannot do that, first of all. Okay, this is very short. Second, this wave two is not even 23.6 of this entire trend wave. There's another problem. And, and then because you're like super bullish and yeah, Tesla is going to the moon, I mean, we cannot put one here because this is only a three-way move. We don't have fourth wave anywhere to label, because we have this huge second wave and you don't even have any fourth wave. So you cannot make a three-way move, a five-way move either. Yeah, but if you're gonna outsmart or trying to be cute with Elliott wave is gonna smack you really good. So wait a second. You're going too fast and slow down. Because you have those. That's what I like about this, because you have such those well-defined rules that if you trying to outsmart and trying to overcome those rules, Elliot is gonna say like, wait a second, it's not right. But you expect this thing to be right going up. Oh, how? How? How can you possibly expect something to work out in your favor when you just have everything labeled wrong? But you're projecting the upside. Well, how are you going to project the upside? It's just not going to work. That's what Tesla is. I mean, if you go back, okay, this is a 1 hour chart. Did I do this? No. Here's a weekly time frame. Whether you need to daily doesn't matter. You can do it that way. Weekly time frame. I mean, if I would have to put a price tag on Tesla for next year, I would put a $600. You know, that's a 127 extension, just to be in a reasonable side. And then if Tesla was gonna really go with Trump administration, yeah, I mean, I would I can open more upside. That's not a problem. But for to be on just a reasonable price target for Tesla, depends on their earnings. We'll see what they're gonna do and how much Elon is gonna manipulate his own stock while he's gonna have his power now. Then then we just have to see if we can just, get the room back to the upside. Um, what did you post it? Oh, invest. Oh, you look at those equal weighted ETFs? Yeah. Yeah, these swings are stretched big time. Yeah, I know. RSP. I have all those. You have a professional version of Optima or the basic one? Or you have the professional one? Yes. You like it? It's a good. It's good. I mean, I uh I live on this thing on Optima. I've just since I've been doing all this Optima, I just kind of like really slow down on doing Elliott wave. It's just um so for like if we're looking at years of punishment. Oops. We're looking at years of punishment. Okay, I know that now the price is coming close to this one and everybody's super excited, but you don't forget the punishment that we all took. Okay? If we just go like this, okay, it has upside. That's one way to look at. Second, if we just go like this and end up forming like this, there is upside. If I go with the wave count being three, this is a pretty advanced correction that most people don't even know what it is. This is a double three correction of an Elliott wave, but it's in the alternate form. The alternate form of this correction is that you have a flat with a zigzag with the triangulation in a Y wave. There are a lot of genius out there who make X triangle like this. This is wrong. X cannot be a triangle. A double three it is a complex correction of an Elliott wave. Complex is, call it a complicated. You combining two corrections with one with they call connector X. Okay. A connector X, you have flat, a zigzag, and then you have a what? So the basic double three is like this: A, B, C, W, X, whatever, Y. So you have an A, B, C, A, B, C, A, B, C. That's your double three. So when you have a three-way move down and then you going like this is what I'm seeing these days. And you go like this. This is wrong. X wave cannot be a triangle. X wave is a connector of the two corrections. It always forms in a zigzag, in a three-way move. This is a clear zigzag move. Five up, three down, five up. Y wave can be a triangle, or it could be a three-way move like this. This is what I had on before for a very long time. But the problem with this, if you do this, okay, putting like this, and I will show it to you. If you keep this thing as a flat, here's your zigzag, and here's your Y wave. If you put a Y here as an A, B, and C, the only problem what you have now from this low, you have a three-way move. You cannot put one here because you don't have a fourth wave. A motive move, a motive wave cannot be a three-way move. It has to subdivide into five smaller waves. So this is why I laid out this. Is just probably some people haven't even have even looked at this, like know about this thing. This is a very advanced Elliott wave. Okay, this correction here is a very rare correction. Worst case is like if you really wanted to squeeze, you can make a case of a triangle as well. But I really don't like triangle. You can make the full contracting triangle. What I mean by that, you can just take it as A, B, C, D, and E. So you can do it that way as well. Okay. It's okay. You can do it. I mean, you can live with it. There's nothing wrong with that doing this way. But the only problem is having a triangle like this is, oops, this E wave is very small compared to your A, B, C, D, and it's just super small. It just, let me do this. Show you some of you guys. Okay, let's do this. When you see things, it's different. Okay, let's put here 4, and you make this entire thing a triangle like this. You see how difficult it is to put a D here, or then you have a high here. You cannot have it like this. You just gotta have to put it here. You can make this case like this. Is okay. You can just put this entire thing into a contracting triangle for this 3 years of uh, of price action. And from here, you just try to look. Basically, now what you're looking for is a post triangle thrust. Now remember, triangle only forms in a wave 4. It cannot be in wave 2. So your trend waves are 1, correction in a 2. There's a counter trend move that against your 5 waves. Then you have a third wave. That's the trend wave. Here comes a fourth that moves against the trend wave. That Elliott puts a hard stop loss right there because this fourth wave cannot retrace below the high of wave 1. And then from here, you're looking for another 5-way move. So that's the sequence, right? So the triangle only forms here. Wave 2 cannot be a triangle. Wave 2 can only be a simple ABC or WXY. That's it. A flat zigzag complex. That's all. This one is going to have this triangle in there. So if you do that with a triangle, you can. It is acceptable. But the problem here is, I mean, you can do this way as well. It's okay with, I'm fine with that. You can just go the same way. You can do 1, 2, 3, and then this is what you're doing from here now. But issue is from here to here. This is a three. This is not a five-way move. This is the reason I want to do that triangle for there. So I'm going to change my. I said before that you can, but no, you cannot. Because if you end your triangle here, okay, and then now let's count. Well, fifth one all the way because this move. Let's focus. Don't worry about this. Let's focus on this. How are you gonna put 5 here? Like this. You see the fourth. You cannot call this a fourth against this. And look at this 1, 2, and where's your 3, 4 here? It's just this is the three-way move. So this is the reason. Oops. I don't want it to make this as a triangle because you cannot get a clear read going up from here, but you can get a much better read from this side. So this is why I have this. It's been a very long time. I think I've done them like few times in when I was doing Gruncies. Now, if you take a time here, is where the completion of the triangle was. Now compare that thing with your, see, 61 weeks of this decline from peak to trough. And the Y wave is 66 weeks. It's perfect. Triangle usually always takes longer time to complete than your prior W wave anyways. So it's extra 6 more weeks of time before you got that the breakout. I can even, if I have to officially call this thing, I actually have to slide this thing up to here because the breakout happens here at 68th week against the 61 week of decline. This makes the most sense, and it has the right look. So what I was gonna show you, I think there is a picture here. This is a very tricky Elliott wave double three. Here, Elliott wave international. You see? Here's your double three. This is the combination. These are very complex corrections. Okay, they're like, but you see a lot of WXY the guys throws left and right. So you have an A, B, and C. Here's your connector X, A, B, C, and Y. This is your simple W3. Sorry, double three. The component pattern more commonly alternate in form. For example, a flat followed by a triangle is more typical type of a double three. Is this a flat, a zigzag, and a triangle? This is exactly what you see here, right? A flat, a zigzag, and a triangle. The point now here is, or the other way is same thing, flat, zigzag, another zigzag. It's all about this Y wave. A Y wave can be a zigzag or it could be a triangulation. But my point here is that X wave cannot be a triangle. It annoys me so much that there is a simple, clear explanation on the book. It's been written before many of you were even born, but but people is gonna sit and they're just gonna force labels, thinking like, yeah, this is a connector X. X cannot be a triangle. Period. There is no book written anywhere where have an X triangle there. This is Elliott Wave International. That's Bob Proctor and Frost, guys' work. This can be a triangle, but not X. X is a connector. It's combining these two corrections, the side by side, flat and a zigzag. Flat or a triangle or is a zigzag is always going to be a middle. It's they call X connector because it's connecting two. Good. It's going to take time. I mean, it's all about practice, 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 and it's just, I mean, year by years after you're gonna get better and better. I mean, this is good stuff here. You see, like you can do a temporary channel. This is international. Aliviv International gives you a pretty good read. You can read about this. You have to read the content first, and then you're gonna sit and do your labeling part. Corrective waves, here you see basic pattern is this. Here's your 5 waves up with a counter trend in 3. It's just the tricky part is here in diagonal. There it goes. See, this is where it gets a little nasty. 1, 2, 3. This is ending diagonal right there. You see, that's in a bear market on the ending diagonal, then it breaks up to the upside. So you have ending diagonals here. You see, show you a live example how the diagonals work. But this is just some of these are they're the rules. Like there are some that just some pictures they have posted based on the description. It's just not right either. You know, the diagonals 4 overlaps with 1. Okay, and because the price is contracting, and then you making diagonals where you have no overlap, well, okay, I wish that plays out for you, but chances are not gonna play out anyways. The flat in a bull market, ABC, see 3 down, 3 up, 5 down, flat in a bear market, AB. You see, there's a lot of corrections, regular flat, expanded flat, but you're just gonna have to remember this. You see expanded flat, A, B makes false break to the upside, then C reverses. Then you have this, the expanded flat in a bull market. You have 3 down, 3 up, 3, 5 down. C always going to be a 5 waves. Always remember, C is an actionary wave. Okay, it always subdivide into a 5 smaller wave. C wave cannot be a 3-way move. A flat is a 3, 3, 5. A zigzag is a 5, 3, 5. Will be something here. Zigzag, running flat. That's where the C doesn't go below. C is shorter. You see, a regular flat is A, false break to the upside, and then takes a C. The C normally comes right back to the A wave low. In a running flat, it stays short, and then from there it goes right back up. Running flat in a bear market, in a bull market. There's a lot of them in corrections in there. You're just gonna have to memorize them. You see, have an extended wave 1, shorter wave 5, smaller wave 1, extended wave 5. You see, it has a relationship these waves have. So you can't in like incorrect counting. You see 1, 2, 3, 4. You have an overlap here because how short this 3 is, and then you have an overlap with 4. This is incorrect counting here as well because you have I feel like the 3 is shorter right there compared to wave 1. It has to get at least 100%. You cannot have a shorter wave 3. It just the wave count does not work. It will never work. You think I never tried it? keeping a third and then trying to be a hero to see if you can get to a fifth. No, it's just not gonna work. This is the correct way. 1, 2, 1, 2. That's what you're looking for. Fifth wave, the primary degree, 5 waves of intermediate degree. I mean, it just goes on and on and on. Motive waves, basic pattern, throwovers, and you got the throwovers here and here goes your triangle. Look how many triangles. Contracting triangle, barrier triangle, expanding variety triangle. This is the volatility pattern they call them. Because the range is gonna like expand. It opens up narrow and then the range expands over time. It's called the volatility pattern. Goes up and down and up and down. You see the ranges are getting bigger and bigger. The contracting triangle is easy like this. You see the price trying to contract and then boom, it gets a breakout. Contracting here, barrier here, expanding here, your running triangle here, bull market, bear market. I mean, there's a lot of stuff you gotta learn. There's a truncation here. Your fifth wave doesn't break above the 3 wave high, stays right below it. It's just very rare. Truncation doesn't really happen that often. It's very rare. Most of the time, a liquid stock is gonna clear. It's gonna take out the high of the third wave. But they do have, but once here or there, you will see truncation happens where fifth wave doesn't make a new high. If a truncation happens in a stock, it's going to have a very sharp reversal to the downside. Just keep that thing in mind. Truncated wave 5 will reverse very sharp to the downside. You need to take out this high for this fifth wave. You don't break this and you fail and then you start to reverse sharply to the downside. Yeah, that's what you have a truncated wave 1 for the wave 5. It's going to give you that sign of a sharp reversal. This is I don't even remember the last time I read this book. Zigzag, ABC, 5, 3, 5. Flat is a 3, 3, 5. See, you just remember, see 5 waves only. Never ever be a 3-way move. Zigzag in a bear market, double, triple zigzag, you see? Zigzag, 5 down, 3 up, 5 down. Connector X. You're not gonna see a triangle in X anywhere. A lot of these guys are just coming up with their own rules, thinking like we're just doing everything right. It's not the way to do it. Do it right. Read the book. Follow the picture. I just went through pretty much everything in front. Have you see anywhere X has a triangle? No. A C wave, like like, but you're just gonna come up with your own triangles. Yeah, why don't you make a triangle in A then? That can be a triangle as well. Screw it. So this is if I would have to put a price tag on a Tesla for next year, I would go with 600 because if this clears, eventually looks like it will at some point. I don't know if it do it here, backs off, whatever happens. That's a 127 extension. And when you clearing this, you have a pretty good chance you're gonna get there. After this bit, like you're planning to take November 4th or 2021 high. Okay. So if you're taking out what? November, and we're at 22, 23, 24. After 3 years, or no, 24, sorry, 4 years. We're in December now. So you're taking out a 4 years high. Okay, which I just showed you with two different patterns. I mean, you should have room to run. You know, you don't consolidate for 4 years and just like poke above for like a couple of weeks and then just come like this. It just doesn't make any sense. It's the same thing that I have. I mean, I'm really thinking about those one guy, what I don't know what's this guy's name? Morley? Yeah, he liked the idea. Yeah, I'm thinking about putting seven mag seven diagonal spreads for next year. Well, I don't know. All seven of them is gonna outperform, but at least three, four of them plays out really good. I mean, still, it's a big win-win. Don't you think so? I mean, I could try to make it with seven will be 7,000. Seven stock, 1,000. I could have some seven different, all seven Mag 7, including Tesla. Okay, well, people, I'll post that thing on uh, on the main chat and ask the other people and see what they think. I haven't done it before. It's just something just like kind of because I look at their again, nobody knows how these stocks will perform next year anyways. Now, if I go back to it's my 20 largest market cap companies, I mean, if you look at the performance, okay, of these stocks, it doesn't mean it's gonna exactly the same way. I would just love to do all 20 to be honest. Just throw 20 grand um on all the top leaders. So you got Nvidia here, 187%, Taiwan Semiconductor, 95%, Walmart, 82%. Jeez, that's 82% Walmart. Are you kidding me? What is going on at Walmart? Somebody needs to know. And who even goes to Walmart? I don't even remember the last time I went to Walmart, to be honest. Um, Meta, Tesla, 56. Amazon, 49, almost at 50. JP Morgan, 45. Eli Lilly, 41. Almost flat after 6 months. Berkshire Hathaway, 31. Apple, 26. Google, 25. MasterCard, 23. Visa, 19. Procter 18, Microsoft. Let's see. This is tough. I don't know what the heck is going on with Microsoft. Yeah, Microsoft is just Exxon Mobil, United Healthcare, Johnson Johnson is down. It's really very 1 month 6.76, 3 months 9.17, 6 months one. I mean, it's down year to date. This is not right, Broadcom, because of the split. Yeah, so for Nvidia, I mean, I think I think we just need a couple of out of seven stocks. We just need few to pop, you know? If they could, I mean, that would be that would be good. There's seven stocks. So we can do now if you look at their performance this year. And then well, we can't do 3 years because we're just only doing a 1 year leaps on all these names. Um, but these seven, we need to make four work or five. Well, technically, if you look at that, if the Mag 7 moves, it pretty much moves together, right? basically like if we just look at 2024, right? Pretty much everything is up, right? But then you look at 2023, everything was up as well. But if you look at 2022, that's when we had the bear market. Is this where you have everything down? You see, like Mag 7 pretty much moves about the same. I do like Google. Google, I wanna take a shot at this one, you know? 25%. Tesla, Amazon. Yeah, I mean, I gotta spend some time. Well, I gotta look. Well, first I gotta have to know what my um upside projections will be, which I will set it up because I'm watching this month close on these names, and then I will. I'm just January 7th, 2nd, when market opens, because everything is gonna open with open flat, right? Because of the new year, and see how much upside we can play until December. And if some stock, I mean, if we can, few stocks can get at least 40, 45, 50% upside, I mean, those leaps will be lit, you know? But other can go flat and, whatever the thing is, but at least you can get something out of it. But I want to make them this way that at least if the Mag 7 do happens to pull back or whatever the case is, that you're just not going to get hurt with time, you know? That's the only downside is the time decay. Just going to have to get rid of that time decay. So the only way we're going to make that work, I need to sell a call against a long call. So that will eliminate the time decay. Well, I gotta have to adjust. I gotta play around with those strikes. So yeah, I will let's roll a $7,000 bet for the next year on all seven stocks. That will be a that will be something. Oh man, I'm tired. Okay. Man, what is going on with this Microsoft? What is this? So if we go here, I mean, look at Microsoft. Here's the low, here's the high. Just it's not accumulation distribution. This is right. This the move up. This is the accumulation right there. Yeah, this is distribution. Yeah, it's just completely sideways. Yeah, if you're talking about it's this is accumulation, this is distribution, and this one they call redistribution. Reaccumulation, I'm sorry. That's what the whatever the guy wake off, whatever he calls himself. I looked it up because I have a couple people were asking me like, "Hey, do you look at Wake Off and all that stuff?" I was like, I'm an Elliott guy. I was like, I don't know what those cycles are." So one weekend I was looking on my phone and call those air accumulation and this phase, he calls it. Where is that picture? better see it. When you have, so you have, here's my, here, is the accumulation right there. There's your distribution. That's what it is. This is just, that's their logic. Selling climax, you have a spring, then you got the test. So age is basic. Remember, I just talked about this thing before. It's just the healthy trend upsides are always same thing to the it works the same exact way to the downside as well. Okay. It's just a matter of like it's just a distribution phase. When you have an accumulation like this, market goes sideways, a price goes sideways, and then after that the price resume back up. So when then you put it with your Elliott wave on a bigger time frame, it pretty much comes out the same way, right? You got a wave one, you got a wave two, you got your wave three, you got your chop in a wave four, and then you just figuring out your wave four, which way is gonna go. It's just a matter of a whole huge distribution going on in the price. And then from there, what is that from here? You're just looking for fifth wave to the upside. This guy is like the way he has everything, he just says like goes up, goes sideways, and just give everything back. This part I don't understand about his logic at all. He has accumulation markup, distribution markdown. Okay. So when you put Elliott wave into this perspective right there, so let's say if you have a one higher degree of wave one is an accumulation, right? And then you have a second wave that comes as a distribution. Don't you think you have an accumulation that is going to be a third wave that comes to Elliott? But his scenario goes, he's like, no, just go right back down. So you just gain ground, go sideways, and just wipe everything off. Yeah, I don't understand his logic here. I mean, he could be right, whatever that what he did, but it's just so you going up, you going sideways, you're coming back down. Not really. I mean, I understand like if he's looking at this as let's say a five-way move, right? Let's say you consider it as a accumulation as a five-way move, and there's distribution right there that you just consider for a steeper two, that makes sense. That makes sense. Like, okay, fine. The distribution phase actually was some sort of a bigger counter trend move that went against the trend wave. You can do that. But laying it out there as a fully logic, that just, I don't like that. I mean, his analysis is he could be right, whatever, but I just don't like the structure of his accumulation distribution phases. You know, a price. So so his distribution, if you look at him, is basically you have double triple tops. So that you basically have your liquidity zone. A liquidity zone breaks, it breaks. It is not it hardly backs off. Okay. We just looked at them. I mean, recently, but we just did the same thing here. You have this liquidity that has been sitting here, okay, for weeks. So if his accumulation based on this that went to a distribution phase, and he's telling you this, this is where I'm off. I know how price works. I know how pattern works. I've traded thousands of different stocks over my career. I'm just confused. That's why I don't follow that guy at all. I was like, I did. when I started looking at it, this is what I was thinking. I was like, how is he putting that as making as a logic? To me, it doesn't make a logic. I just give you a perfect example here. If you have an accumulation here for this massive move, I mean, you're talking 69% move on a stock, right? 70% move on a one direction on a stock. I understand it has a dip here, but from peak to trough, let's say even you do this, 30% move. So if you use a concept, if you take a swing as a high, that's your higher low, and you're looking for a higher high. So what you're basically trying to do, you're trying to break this high right there, is for the price to continue to the upside. So now if you want to put your distribution phase, which do come, I understand that, because market is gonna, the price is going to go up at a certain time and it's gonna get tired. It's like, okay, wait a second, it's gonna go sideways. That's where the distribution comes into a play. So a lot of time on a strong on a strong momentum stocks, so a stock which is gonna start banging on this wall over and over again, it just makes a liquidity zone. It is where liquidity is sitting. Buyers are in, but sellers are keep coming, rejecting that over and over again. Buyers finally give up, liquidity sweeps, boom, here goes the price up. Yeah, but these suckers right there takes a very long time. And but then to to buy shares to take out liquidity like this is much easier. When it comes to the option market, to structure a trade to take a liquidity zone, that's painful. You know, it could take days and days, it could take weeks. And you can see that you have those double, triple, quadruple tops that you're trying to see if you can sweep the liquidity out. But that's where you have the time running and your premiums are melting every single day. You know, with shares is always great, you know, because you have no time decay now. You can play the breakout. It could happen next week, it could happen tomorrow, it could happen 2 months from now. But you have you know, like the stock has the initial run, stock is going sideways. I can see the stock is not, the price is not making new highs, and it just keep rejecting right there at the wall. It's just a matter of time now to see like when that thing is going to clear, you know, and finally one day it will. But which day, nobody knows that, you know. And well, you know, you could be doing somewhere and not watching the price, and if the price breaks out that you've been watching for like 3 weeks, you step away from your desk doing something or going, you could be doing anything in your life. And then all of a sudden the breakout happens and you're like, well, wait a second. I've been watching this damn thing for 3 weeks and all of a sudden I got a breakout. But again, you know, you can't time every single move, and not every trade is going to have your name on it. It's just not how it works. There's going to be a lot of trades that just going to, just that you wanted to get in, you didn't buy it, and then the breakout happens, and now you wanted to chase it, and then after that, once you're going to get in, and it's going to start taking a punishment, because a lot of people are just going to start booking profits, you know. I mean, where this thing goes, I mean, where this fourth wave will set in, I don't know that. But it will come into a play, and then you get the final for this. Then you think this fourth wave is going to be easy to measure. Then we're gonna have to play with this to pair this fourth, and then I have to look for this fifth wave to project it with this fifth. You know, so I don't want to do all this. Okay, the projections are all here. Now, which one do we go and hit? We simply don't know. We as a trader, we trade the unknowns, right? We don't know. Future is not written. Everybody knows that. This is what it is. The upside goes to 447, whatever it goes. I don't know that. It can stop anywhere. Where it goes back down, whatever happens is not our concern. These are the targets that you chase if you're in a trade. This is what I do when I'm in a trade. I'm looking for my fib targets. My fib hits the price, I'm done. I'm out. Good trade. I'm happy, thankful what I got, and just move on to another one. Price can go up another 10 more points. I'm like, oh shoot, why did I cut the trade? It's just not my concern. I'm out. I'm good. You should always be thankful what you get. And profits, booking profits, nobody ever go broke taking profits. Always remember that. Nobody has ever go broke. So this is it. Was rest is all good. I hope you learned something today. Yeah, man.